record so I can make sure it's being recorded. Right. Okay, I believe it's now being recorded. Okay, well, thank you everybody for attending Tax Breaks and Tax Traps. We have got a couple of people that will be speaking today. First of all, our disclaimer, Self-Employed Australia does not provide tax advice. We do refer members to registered accountants and legal practitioners for advice regarding your personal circumstances. And the tax break list is sourced from the ATO and Board of Taxation. Today, your speakers will be Ken Phillips, who's the Executive Director of Self-Employed Australia, and John Findley, who is a lawyer from Lawyer Up. I'm Kathie Thomas, and I'm your MC for today. So I'd like to now hand it over to Ken so he can get the ball rolling. Thank you, Ken.
Thanks, Kathie. What we're going to do is, John and myself are checking on this, that we'll go through lists of the tax issues, and then if anyone's got questions or queries and so forth or comments, we'll handle those at each while each PowerPoint's still up. The first list that we've got here, now again, these are all taken from Board of Taxation and the ATO sources. So we're just going through what they say is available. So the first one, of course, is, and this first PowerPoint that you've got in front of you is fairly uncontroversial. We don't see any tax traps to really speak of in these areas. But of course, you do just need to be reasonably careful with all of these. So the lower tax rates for companies and individuals, that's clear and available. That's passed the Parliament and they're now operating. There's an immediate deduction on the professional costs. So if you're starting up a business, your lawyer, accounting costs and so forth are immediately deductible, where my understanding is in the past you had to deduct those costs over several years. The simplest stock recording one, we're really not quite sure how much of a benefit this is, because you don't have to record the stock if the differential in the stock between the beginning of the year and the end of the year is within a certain amount. But I'm not quite sure. I'm an ex-retailer. I'm not quite sure how you work out what that differential is without doing a stock take. But there it is. You can still, it's supposed to be simpler in terms of your stock take. The easier pay PAYG instalment calculations, the ATO is in the process of doing those for you if you wish. Fringe benefits tax on car parking and electronic devices. So if you're got a space at your business premises for car parking, you don't have to pay fringe benefits on that for car parking for your employees. But oddly, if you are paying for your employee to park at a commercial car space, that is not tax deductible. Or rather, the fringe benefits relief is not tax deductible. But it is on electronic devices such as, you're supplying employees computers and that sort of stuff. But John, you had a comment on that, something to be cautious of from recollection.
Yes, Ken, in regards to fringe benefits tax on cars, if you're a small business, as I am, and you work from home, as I do, and you park your car at home or in your private garage, and the company owns that car, then it attracts fringe benefits tax, because the car is there as a benefit to me. I can use it anytime I like. So what I do is I own the car privately and I charge mileage to the company. Otherwise, there's a complex fringe benefits tax calculation that has to be done on the value of the car, or the value of the car being available to me. So I just get you to talk to your accountant about that. If the company owns a car and it's garaged at your home or near to your home, it could well attract fringe benefits tax over.
So even the point on these things that we think are reasonably straightforward, there are issues and there are complications. In other words, the message is to be fairly careful and refer back to your accountant. The no GST registration if your turnover is under 75,000. This has been available since GST came in, and then also there's the free superannuation clearinghouse for small business. No, I don't do that now, but I had to do super for employees in the past, and it was an absolute pain, an administrative pain in the neck. That can now all be handled through the ATO's clearinghouse, but my recollection is that that's going through some level of problem these days, that it's all not working as easily as it should, but at least, you know, the issues there. So they're the issues that should be reasonably straightforward, but still check your account with your accountant. So any questions or queries on those particular items while we've got them up?
Kathie, your speaker's muted.
Sorry. You can enter your questions in the chat box. So for Paul and Dino and anybody else who may be here and is muted, there is a chat box and you can actually enter your questions in there. There's no questions there currently.
All right, Kathie, we'll move on to the next one.
Right.
So these two issues are ones where we have got warning signals around them. The first one, the instant depreciation write-off. So this is terrific, of course, because if you've purchased an item up to $20,000 from recollection, I think it is 25, it can be written off in that same year. But they've got sort of things around this, such as this is subject to pooling arrangements. Now, I've got to say, with the information that I have read from the Taxation Office, I don't understand what they're talking about with pooling arrangements. I would see a trap in there. You've got to be very, very careful of this with your business. Again, this you need to check with your accountant. The ATO, of course, are involved in a significant crackdown on whether or not the item you've used is genuinely being used for business. Wheel drive have gone to the MCG for the football, and the ATO is known to be wandering around the MCG taking car registration numbers and as proof that the car that you have, that you're claiming as a tax deduction, is not genuinely being used for business. So they're the two issues that you've got to be particularly careful of on those, particularly the one genuinely used for business. Any comments, John, on that?
Be particularly careful. $20,000 instant write-off is quite attractive. Comes straight off profits. However, my wife would like a new lounge suite in our house, and I happen to tell her that's not a business expense. Pooling arrangements aren't all that difficult, and your accountant will have his head around it. Basically, it says if you've got a bunch of assets, you can write them, or you don't have to keep an individual ledger for each asset. You can write them all off at 20% per annum. But it's an accountant's game, that one, not a lawyer's game. Over.
Good. The refundable research and development grant, we raise a huge warning sign around this, just enormous. If you watched the Four Corners show, Mongrel Bunch of Bastards, in which we were quite significantly involved, at least two of the stories there related to people who have had their businesses destroyed over the research and development grant issues.
Could I John here, could I just go back and say, whilst Ken says Self-Employed Australia was significantly involved, we weren't significantly involved as a mongrel bunch of bastards. we're involved in revealing the naughty behaviour.
Yes. Thank you for that clarification, John. Much appreciated.
Lawyers here.
Yeah. So what has come out of those cases, and we know those particular cases very well, and we're quite aware of some other cases that have come to our attention since the Four Corners show in April. And so what occurs is with research and development grants, they're quite expensive to apply for, quite a process involved with the whole thing. It means applying to the Department of Industry and Innovation, whatever they're currently called. Usually you're needing a consultants to assist you through with the application process. You then get the grant is approved by the Department of Innovation, but then it's administered by the Taxation Office. So it's a tax rebate that you receive. It's not a grant as in terms of a cash grant delivered to you. What's been happening with the Taxation Office is that they are backdating, and they are history then of turning around after you've received the grants, the tax grants. The ATO have a history of then retrospectively turning around and saying, oh no, in actual fact, we think you were committing fraud, that you weren't entitled to it, so on and so forth, and then backdating their demands. So a number of cases, quite a number of cases where people have received $200,000 or $300,000, say, in the grants, the rebate, and then the Taxation Office some 2 or 3 years later has come back and said, no, you've committed fraud, you owe us the money, and on top of that, we're imposing penalties and interest and so on and so forth. Now, the shows, the stories that were highlighted on the Four Corners show, one of those, the person whose business was destroyed after about 4 years of going through the ringer, the Taxation Office eventually issued an apology and a recognition that they were wrong. The second case that was highlighted on there, the same sorts of situation, not an apology, but a recognition that the ATO was wrong. So this is an area fraught with danger. It requires major review in terms of the processes by the government. But if you're in that area of business, do you have to be really, really careful? John?
John, yes. Can the parties that we're involved with requested compensation for damages by defective administration, CDDA. It's a grant that the government department can make, and one of the guys, his damages or detriment was hundreds of thousands of dollars, and the ATO offered him $10,000. It's just outrageous, and that is not a reviewable decision. That compensation thing. So be really careful about it. And frankly, from my point of view, I would never base a business plan on the availability of government funding. It's just a nice little sweetener, I think, because you can't trust government. They can just pull it at any time. So just be careful. Take good advice from your lawyers and from your accountants before you base a business plan on government grants of any type. Over.
Yeah, I'd agree with that with John. My wife and myself, some years ago, ran a small business. We're a bridal jewellery business. We're exporting both to the UK and the United States. We received export grants, but you had to spend all the money beforehand and then get the money when you came back. But I've got to say the amount of paperwork that was involved and the review that had to occur over those grants, it was really questionable whether it was worth all the time and the effort. But that was another issue. So any questions or comments on that one?
There are none showing at the moment, Ken.
All right, well, we'll move on, Kathie. Thank you. So the capital gains tax, when you retire or sell, the major area that we see with that, which ring alarm bells and so forth, or caution bells, big caution bells in particular, is around what is meant by permanent incapacity and retirement. Again, we would see as a very complex area which might require a great deal of care. So, John, on that one?
There's a couple of departments get involved in this. If you're retiring, it's quite possible you're seeking aged pension, for example, or if you're incapacitated, some sort of benefit from Centrelink. The ATO definition isn't the same as the definitions for those other departments. So again, just be careful. Just be careful.
So the restructure, the rollover relief. So this is to do with a company if you've had, and quite normal with small business. It's funny with the statistics, they show that most small businesses a lot close after about, say, 3 or 4 years. But in actual fact, my experience is if you look deeper at the stats, you'll find that a lot of the alleged closing down of a business, a small business, is a restructuring into another business or another form of the business. So restructuring of your business for a small business is quite common and quite normal. But the question will be, what does the ATO see as a genuine restructure? And this area, again, is fraught with enormous potential complexity, and great care is required. John?
Small businesses often go from either a sole trader or a simple proprietary limited company into a trust, and that makes a lot of sense. If you're trading and you've got assets, you want to protect them, you put them into a trust. That's quite normal and a genuine business move. It is a genuine restructure if the ownership of the assets remains the same. So I'm a small business, proprietary limited company, I restructured it into a trust. It's just all my ownership. It's genuine. If I restructured into a trust where I'm a beneficiary and my wife's a beneficiary, the ownership interest in the business has changed, and that's not a genuine restructure. It's a lawyer's game. Talk to your lawyer if you're considering taking your business from a proprietary limited to a trust, which is very, very common in small business. Over.
Just one thing I'd put in on that. I've been in business for myself my wife and myself for 35 years or so. We originally had trusts and company and all that sort of stuff. We're now a partnership. In small business, it's what suits your particular circumstances, which is important. And I'd actually have to say, you've got to have very good cause to warrant the expense and the complexity of having even a company and a trust. Most of the time, sole trader, partnerships and so forth will suit most people. A third of small businesses and self-employed people are structured as companies or trusts. And certainly my word on that in terms of simplicity, keep it as simple as you possibly can. There are always genuine reasons for going into a company or a trust arrangement, but don't go into it just for the sake of going into it, would be my view.
Well, could I say, if the tax office sees the reason for the restructure as principally for avoiding tax, they have a Part 4A case against you. They can treat your business as though the restructure never took place, and they can take away the tax advantage and go back many years, as many years as they wish, really, and hit you with a tax bill. So it has to be more than a requirement, an intention to minimize tax. It has to be some other reason, and asset protection is a good one to do.
But that leads on to the 2-year ATO limit. So for small businesses, the ATO, it's clear that after 2 years, the ATO can't review your tax return. And that's what's the upfront information on that. But the areas that really got our goat going on the ATO and really quite angry with them, and where a lot of our campaigning has come from, we've had instances with people, quite a number of people, where the ATO have, quote, formed an opinion that the person was conducting fraud. Now, mind you, if the ATO forms an opinion, they don't have to prove that. This is the really quite scary bit about it. Now, fraud's a pretty serious accusation against someone, but the ATO only has to form an opinion of fraud, and they can then go back as far on your tax as they choose to go. So one of the instances we've dealt with has been all over our website, Douglas case, and one of the most typical ones, they went back 10 years on his tax, and their accusation of fraud against him was, for example, that he hadn't used an accountant to do his tax return. He's done his tax return himself. In our view, that's not fraud. That particular case was fought through to the federal court, and in the federal court, the taxation office backed down in the federal court after, what was it, 2 years or more of dispute, et cetera, and the expense and the time and the effort. So it's one to be extremely careful of. It's a trap that we just find is incredible that it even sits there. So if the ATO forms an opinion that you have conducted fraud or evasion, the 2-year limit is completely wiped and they can go back as far as they like. It's a trap that we don't know how anyone can get out of, because the accusations of fraud are spurious, to say the least. John?
Yes, how do we get around that? The forming of an opinion by the Commissioner is not reviewable under the ADGR, not reviewable under the appropriate acts. What the taxpayer has to do is has to show that the tax levied is excessive and show what it should have been. But he can't really dispute the formation of the opinion. It's a very difficult area. Try not to let it go that far. What constitutes fraud or evasion? If you're trying to be tricky with your tax, it may not be fraud, but it may be evasion. If you're trying to be, if you're not diligent in the way you do your tax returns, it could be recklessness. And recklessness is a form of evasion. And it just, all I can say is just be careful. Over.
One of the points that we'd make on this particular one, if someone comes to us and says, look, they've got the ATOs let them know that they've got a tax audit, I've got to say, look, we say do not talk to the taxation office. You immediately need to talk to your accountant. Don't have phone conversations with them. Don't have a friendly cup of coffee with them, et cetera, et cetera. You need to be very, very specific, because we have seen the occasions where the taxation officer says, well, why did you do X? And the person said, well, to avoid tax. Meaning, from their meaning, was to avail myself of the correct tax deductions and so forth that I was entitled to. That was their layperson's meaning of it, whereas the taxation office have taken that word, I did it to avoid tax, in a very specific way, and then they've used that as a basis to be able to start to run a case. So you need to be extremely careful on what you say to the taxation office, to the point of, if you get an audit, in our view, you need to make sure that you have professional backup on it from the word go, so that you don't inadvertently get yourself into a trap. That's one of the big reasons why we've now got the tax audit insurance through Lloyd's, with $50,000 worth of services available, if you remember, and so certainly any of our members who are protected members, we say, look, if you get a contact from the taxation office, about an audit, you contact us straight away and we will step in and start to provide assistance. So it's one that we don't know how you can avoid it, but you've just got to be very careful and take the appropriate steps very early in the piece. So,
I would
any
go further.
comments?
John, the friendly chat from the taxation office is fraught with danger, and they know that they're coming up to the 2-year limit, beyond which they can't continue a review without federal court approval of that review. And they say to the taxpayer, "Oh, look, do you mind? Could you give us a little bit, extend the time for us to complete this review?" And the taxpayer, trying to be cooperative, says, "Okay," and that just lets the tax office off the hook. The 2-year limit is to give certainty to the taxpayer, and the tax office gets around that by somehow or other forming an opinion of fraud or evasion. I don't comment whether it's a good or a bad formation of opinion, but over.
All right, thanks, Kathie. So any questions or comments, Kathie, have we got from that one?
No, there's no questions showing at the moment. I should mention that we're drawing very close to the end of our time, Ken. For those who are present, if you didn't want to share a question now, but you have got a question that you would like to ask, we would certainly welcome you to contact Self-Employed Australia. You can message us, private messages via our Facebook group or our Facebook page, or you can contact us via our website. Perhaps if I show the last slide, you can see there our web address. So you can definitely contact us via our website. We have a lot of articles, news articles that have been written by Ken and by others as well, so you can read information there. And certainly via our Facebook group, we welcome anybody, coming and joining the group, having a chat, raising questions, and commenting on any posts that are already there. Is there anything further that you, Ken, or you, John, want to say before we close off?
Yeah, just specifically, we have got a more detailed briefing note on tax traps, tax breaks and tax traps on the members section of the website. So that's a more detailed briefing notes on that.
Okay, good. Well, thank you very much for your time, everybody. It was good to have you here. We do appreciate you having attended today's event. We look forward to being able to bring you more events in the near future. Thank you for your time here.